This is Alan Farley from FX Empire. Let's take a look at three top earning plays in the new week. First up is Target. Target had a very strong 2020 for obvious reasons. It was a COVID-19 beneficiary, broke out above the 2019 high in the third quarter, and then entered this very graceful rally that pulled back to the 50-day moving average once, twice, and again on Friday. Now, this is an interesting spot to be in just ahead of an earnings report because any sell-in news reaction is going to drop this stock into a correction that could come down to about the 170 level. So hopefully we'll get a bounce and then bulls will take control. And if we get a bounce in this level, and Target does tend to report very strong earnings, it could go back up and trade up its high posted back in January. Moving on, let's take a look at Costco. Now, you'd think Costco would have the same chart as Target, but you'd be wrong. Costco's entered a correction now. In fact, it started to stall out right around October, up here around the 380 level, and then it posted this nominal new high, then it posted this nominal high, and then dropped into this congestion pattern that has a right shoulder, a head, and a left shoulder, a head, and a right shoulder, breaking down in January. Now, our measure move target for this head and shoulders breakdown is down around the 320 level, which also happens to be the 618 retracement of the big rally from March of 2020 up until the top in December or late November. So this isn't a really good stock to buy unless you want to try to play a recovery back up to this 200-day moving average. Better for Costco holders or prospective Costco holders to wait for the bottom to drop out a little bit more, get down to about the 320 level before jumping on board. Finally, we have Zoom Video Communications. Now, this is a stock that's fallen out of favor after a magnificent 2020. Stock posted an all-time high in October, right around the 600 level. Then Pfizer came along with his vaccine right around here, and sort of the bottom dropped out of it. The COVID-19 recovery plays, the COVID-19 beneficiaries were getting sold in favor of COVID-19 recovery plays, and that's been the theme straight through the first quarter of 2020. Now, there's a lot of support down here right below the 350 level, including the 200-day moving average. As you can see, we have this big gap that's just about been filled, and we have a test of the 200-day moving average here, and then another lower high. So we've got a lower high here, we've got a lower high here. So it's come right back down to a level that Zoom can't break, because if it breaks, it's going to also be breaking this double top, and the stock could head much lower, perhaps down to the 150 level.